Welcome to The Explainer. Today, we're diving into a really big deal for India's entire financial sector. The government has just thrown the doors wide open to 100% foreign ownership in insurance. So we're going to break down what this really means for the big companies, for the economy, and most importantly, for you. So, here's our game plan. First, we'll cover the big headline news. Then, we'll explore how that's going to shake up the whole insurance industry. After that, we'll get personal and see what's in it for you, the customer. We'll also zoom out to see how this fits into India's grand economic plan. And finally, we'll take a look at what the future might hold. All right, so what's all the fuss about? Let's get right into the nuts and bolts of this major policy shift. Industry experts are not holding back. Just look at this quote from Narendra Gunpuli at Grant Thornton Barrett. He calls it a watershed moment. That's a huge statement, and it tells you just how big of a deal this really is. Okay, so here's the absolute core of it. The cap on foreign direct investment, that's FDI, in insurance companies has just been raised from 74% all the way to 100%. That means foreign companies can now have complete ownership. It's a total game changer. And for anyone who's a little fuzzy on FDI, just think of it this way. It's not just about a company overseas buying some stock. It's about them coming in and actually building things. A new office, bringing in their tech, their expertise. It's a direct, on-the-ground investment. So you might be wondering, what happens to the insurance industry itself with this new rule? Well, everyone is bracing for a pretty massive shakeup. To get a sense of the scale we're talking about, let's look at where things stand right now. Even with the old limits, foreign companies have already invested over 82,000 crore rupees into India's insurance market. That's a lot of money already. But now, with the doors completely open, the predictions are just staggering. The CEO of Bajaj General Insurance, Tapan Singhal, thinks this move alone could bring in a mind-boggling 10 lakh crore rupees. That's not just an increase, that's a whole different league. But this whole thing is much smarter than just being about the money. If you look at this table, the new bill is also making some really important changes under the hood. We're talking better protection for you, the customer, getting the law up to speed with digital insurance, and even making it easier for new companies to come in by lowering the entry requirements. Now, with all this new cash potentially flooding the market, you can pretty much bet on a wave of mergers and acquisitions. It's a pattern we've seen before, right? Think about what happened in banking and aviation in India. As the big global players move in, the local companies will likely start teaming up to stay competitive. The entire industry map could be redrawn. Okay, this is all fascinating for the industry, but let's bring it back down to earth. Let's talk about what this means for you, the person actually buying insurance. Right, let's get down to brass tacks. We've talked about these huge numbers and corporate strategy, but how does 100% FDI in insurance actually impact your life, your wallet, your family's financial security? Well, the good news is the potential upsides for customers look pretty solid. More competition usually means more innovation. Think more customized products that actually fit your life. It could also mean lower prices, which is always great. Plus, with more players fighting for your business, service should get better, with faster claim payouts and fewer frustrating rejections. And maybe most importantly, all this new capital could help insurance finally reach deeper into smaller towns and rural areas. So let's pull the camera back for a second. Why is this all happening right now? Well, it turns out this is just one part of a much, much bigger picture. See, this policy change isn't happening in a vacuum. It's a key part of something the government is calling the Reform Express. Basically, it's this big push for a whole series of fast, bold, market-friendly changes designed to supercharge the Indian economy. And you can only make a move this bold when you're standing on solid ground. And India's economic momentum has been incredible. Just look at this chart. The economy has more than doubled in size in recent years, jumping from about $1.5 trillion to almost $4 trillion. That kind of growth gives you the confidence to make these big bets. And according to experts like V. Vaidyanathan, this strength comes from a few key pillars. You've got massive investment in infrastructure, both roads and digital. You've got way more domestic money being invested through things like mutual funds. And it's all supported by a strong financial system that's managed to pull off something pretty rare: high growth and low inflation. So, the floodgates are open, the Reform Express is chugging along, but what's the destination? What's the ultimate goal here? The long-term vision is massive, there's no doubt about it. Insurance for all by 2047. The real question, the one we'll all be watching, is whether this single powerful policy change will be the key that finally unlocks that future for every single citizen.
Hey, if you found this explainer helpful in understanding this huge insurance shakeup, do me a favor and hit the like button and share it. And if you want more deep dives like this, make sure you subscribe.
But I really want to hear from you. What are your thoughts on this? Is this a good move for India? Let us know what you think down in the comments. Thanks for tuning in.